Hey there, Wall Street winners. It is March the 26th, Tuesday, and it's 8:38 a.m. Eastern. So pre-market, we see that the Dow Jones Industrial Average, the S&P 500, and the Nasdaq are all in the positive, all in the green in the pre-market, setting up for a positive open. If we take a look at our individual holdings, it's kind of a weird day in that we've had a major accident, a very unfortunate accident. Heart goes out to those in Baltimore who have been affected by this. The bridge collapsed by the Maersk tanker that ran into the bridge. Appears to be accidental. But we don't have a lot of market data. And um, it's strange to see the movement that's going on, but that's just how the market operates. So you want to just kind of go with that flow and not try to fight the current and try to make some profit from it. So here we have Lulu on a bit of a rebound. Looks like it's up about $3.35 pre-market. So we saw that plummeted after earnings and future forecasts for less than forecast sales going forward in the next quarter. It's making a bit of a recovery. It dropped $14 yesterday, so maybe it's hit its bottom there and it's going to do a bit of a dead cat bounce and come back. So that's a possible play. Question there is, do you really believe that athletic wear industry and Lulu and its position in the market is going to last? Is it a fad, or is this something that we're going to see continue for the next 5 years, at least the next 2 years? And if you believe that it will continue, then it's probably a great time to lock in and just hold that in the long term. If we go down there to Nike, Nike again dropped after earnings. It's in the 93, 94 range. Looks like it's going to get to 94 this morning because it's up 25 cents pre-market. Again, if you're a believer in Nike and you think it's going to sign some new and amazing contracts with athletes that help promote the brand and help sell more shoes, now might be a great time to buy this. And it's likely going to get back into the, say, 110, 120 range within 6 months to a year if it can revamp its sales efforts and sell more shoes. So if you think consumers are going to go out and spend money on these types of things, which would be considered small, extravagant purchases. So they're not needs, they're wants in most cases. And they're ways that people will spoil themselves or treat themselves to make them happy temporarily. It's a little dopamine hit, right? When you buy something and it makes you happy. It doesn't last long, but that's typically one of the reasons and motivations behind consumer behavior. So if you believe that consumers have disposable income, this is applicable both to Lulu and to Nike. If you believe consumers have disposable income, which I have to question at this point with interest rates and inflation, and they want to direct it towards retail goods, then these may be two stocks to look at. If we move down to our oil stocks, these things have been on a run for a while. They've been on a bit of a tear. You can see that some of our faves here, like Valero, pre-market up $1, down $1.15 yesterday, so pretty much even over the last couple of days. Exxon up 26 cents pre-market. It was up $1.16 yesterday. It's working its way up to the 117, 120 range. And it'll probably peak, I would imagine, at around that range. I think Valero is kind of hit a peak up at 168. But if you dig in and look at Valero and look at the financials, I mean, it's still an amazing company, trading at a very low price to earnings ratio. It has a dividend of 2.5%. We'll see what the earnings look like on April 25th, its next earnings release. But as long as it continues to generate cash, bumps up that dividend on an annual basis, and doesn't run into any issues around the price of crude, which is outside of its ability to control, obviously, I think it's going to continue to do well, but every stock pulls back at some point. So that's what I'm kind of waiting for. I've been holding a position of Marathon Oil for a while, and I bought it at about $28.50. So I'm waiting for this stock to hit $29, $30, and I am going to unload Marathon Oil. It's climbed from, well, if we go back 6 months, months. You can see that in January, this thing was down around $22. It's now up around $27. So that's a pretty decent return. If we go to 1 month, it's almost a 4% return. So it's a great return over the last quarter. And it may be time to take some profits. And the same is true for SLB and Halliburton and others in the oil sector. I've been moving a lot of my attention and focus into tech recently. I have been avoiding Reddit. I think Reddit is not a valuable company, in my opinion, to put my money into or to invest in, based on the fact that it's not making money and the way that it's valued is a little ridiculous, in my opinion. Salesforce has been an amazing ride for individuals who have bought this. If you look at the 5 year, it's been a great ride. You're up 145%, sorry, 90%, $145, 90% in 5 years, which is a great return over 5 years. But here again, if you bought it back in 2019, 2020 and held it to now, yes, you've made 90%. But if you had sold near some of the highs, and again, you can't pick the highs, but if you had sold anywhere between, let's say, September, we'll call it, where's the peak? August 24th, 2020, and even down here, December 13th, 2021, you would have made an amazing return there. And then you could have waited until the price came down a little. And even if you didn't buy it at the bottom and you bought it back around where you bought it before, it's now gone up again. So you really would have doubled your money and doubled your growth if you had followed that strategy of just taking some profits off the table, knowing when stocks are at all-time highs that they're probably not going to continue to go up. Palo Alto, another favorite of mine, looks to be well-established pre-market. I'm not going to buy in at 285. I'm going to wait for this to dip back to 283, 282, 281, somewhere in there, and then I'll take another bite at that apple. But I do expect that this will pop up to the 287 to 290 range, maybe a little higher into the low 290s, because that's kind of the envelope that it's working in right now. I love Cloudflare, but I think I'm going to wait on that one until it drops down to, say, 92, 93. If it does, maybe it won't, or wait before earnings because I think it'll have some good earnings again. Microsoft has taken a bit of a hit the last couple of days, but it's still up near its all-time high and set to move forward pre-market. Another one I can't wrap my head around right now is the growth of ARM. Again, you don't want to fight the market. Just go with the flow of the market, but be careful and get out and take your profits. This thing is going up almost like NVIDIA is, and unjustified, I think, we'll see in the long term based on reality and valuations. And then we look down to AMD, which has taken a hit. AMD is a pretty attractive price right now. However, there is some controversy around whether or not China is going to ban AMD and Intel chips in their microcomputers. And if they do that, that's going to hit their sales and revenue number, and that will be a factor in their forecasts. If we go down a little further and take a look at some of the others, the one that I was into and out of a fair bit yesterday was Google. So Google's a favorite of mine, and you can see here what it's been doing even in the early morning session here. I mean, going up as high as, what are we there, 152.25, and down as low as where we just were by the looks of it, down at 151, 60, 61, somewhere down there. If we look at the 5-day and look at yesterday, we saw that it dropped here at open, and then it slowly made its way back up. Now, it didn't come all the way back up to where it opened at, but it slowly climbed its way back up. And this provided an opportunity to buy in at a low point and then sell out, wait for it to come back a little, buy in again, sell out, wait for it to come back a little, buy in, wait, and then hold on to it or sell it out. So I held one position in one account, sold one position in another account, and waiting on that to open today to potentially do something similar. Adobe is likely going to inch its way back. So here it was up $7 yesterday, but if we look at the 5-day, it's dropped down again. So I do think that we're going to see this pop up and get into the 522 range. So at 507, not a bad purchase price if you're looking to buy and potentially have to hold some Adobe. Probably not for more than 14 to 30 days or the better part of a calendar month, but that could be your outside window to get out of that at a profit. And then we get to the banks. So the banks are going to be the first to report in April, and I believe we're going to have some good news from the banks, but I am a little cautious here. So I'm going to wait and listen for what happens with the JP Morgan announcement as they announce and we take a look at the earnings date on April 12th and see what they come out with, because that will likely be an indicator of what we're going to hear from Morgan Stanley and what we're going to hear from Goldman Sachs. And then as we start to hear from the regionals, we'll start to factor in what's going on there in terms of the regional market. But if we do see a pullback in these, and we're starting to see a little bit, at least we saw some yesterday, but if we do see a pullback and Goldman gets into if it dives a little bit and pulls back before earnings, and gets into the 380, 388 range, somewhere in there, 82 to 88, I think Goldman is a solid purchase going into earnings. And I feel the same way about Morgan Stanley, but not at $91. If that came back into the 86, 87 range, I think it's a pretty safe bet to see a few percentage point increase there. So that's where we are today. I wish you all the best in your trade.